Okay, welcome everybody to our podcast, Micro Moment Trading Podcast, and we're going to have an unusual one today. It's going to be a lot of fun. We're This is going to be totally on dividend paying stocks, and we're going to show you, Randy and I'm going to show you how today you can make 5, 10 times what you make in dividends just with this technique. You're not going to lose your stock, and it's just a fantastic technique. And you're probably going to move your returns if you're getting 1.5 or 2 or 3% a year dividends, probably paid quarterly. Then you're going to move it to probably 5, 10 times that. We'll just see if you got some examples of dividend paying stocks. Put them up with the little comment thing. We'll take them and run through this with you. Don't forget to go to our website, www.micromomenttrading.com, and hit the Cal report, and you'll get the Cal report. It's been published for over 20 years, and you'll get it for free. It's usually sent out on Friday. If you have Friday, Saturday morning, and it has emails in there from all our clients, and it has all our techniques that we're doing and what they cost, and any free ones we have, and just all kinds of stuff. Primarily the emails from all our clients. They tell you in there. They tell you how they're doing, and they ask questions, and our folks here answer those questions and take care of them. And so that's the free Cal report, and it's www.micromomenttrading.com. That's the website. We have our regular people here today, Tim, in his new place down in Georgia.
Yep.
Georgia. Randy, are you back to Atlanta?
Yes. Yep.
And Deshaun, who has his picture. Deshaun, you need to unmute your picture, and myself. And Randy just got back. There you go, Deshaun, red shirt man. Randy just got back from his major sort of World Series baseball tournament out in Arizona. How'd it go, Randy?
Oh, we're getting ready to head to another one in a couple of weeks. So we finished the tournament here in Georgia. So in a couple of weeks we'll be Arizona, and then a couple of weeks after that it's down in Fort Myers.
Okay, wow. Fantastic. Cool. How did you do in this last weekend?
We came in third place.
Third place?
Yeah.
Yeah. I can't believe it.
we ran out of gas in the last game.
Okay. I'm going to do something I've never done. Only it was the SteamYard thing in this podcast. I'm going to try to get a chart over there. You're going to look at the chart. I've got a couple of charts to show you. One is, well, I actually have three. One is where you can find the premier dividend paying stocks in the universe, and that's where you can find these things if you don't already have them. And then we'll take an example. Hopefully you've got something. Otherwise, we'll use like Walmart. We can use anything. We can put it into these tables that have all the option chains, and that's all the materials that you need to do this. And so I'm going to try to get the picture over there now. So Marcus, is what it's showing is the one that says chart and option chains, right? Marcus.
Yep.
Okay,
yeah,
good. Okay, now this is the CBOE tool here that we're going to use, and you're going to see how easy this is. Number one, I've already put Walmart in. It could be anything. If somebody types in something, we'll put that in. But let me just go through this and show you how easy it is. You put your Walmart in there, and you say get the quote, and you can do the option chain here, and you can do the chart here. Now, in this case of Walmart, here's the last sale, 140.88, and the time of last sale was, well, actually this is yesterday. It doesn't make any difference. So
right now it's trading at 141.38. So
okay, we'll just use this just since this is on this chart, okay? And because it doesn't make any difference, everything's the same. And then we can go over here, and is it the same? What happened by one with all the quotes on it?
I click on the option chain there.
Oh, here's an option chain. Okay. Now, right now the stock at this time in history was, I guess, yesterday sometime. No, it says the 8th. It's the 8th. This is up to date. Stock's going for 141.44. Now, you may have paid, $50 Walmart or $2 or whatever. It doesn't make any difference. Right now, it's going for 141.44. The reason it doesn't make any difference is because you're not going to be caught out. So you're not going to worry about if you paid more for it. But you want to use this price because this is what's relevant, the price today. Then we're going to sell it out of the money call. We're going to go down here. We're not going to use the 9 because that's too close.
Joe, are you on a Brave browser or are you on Safari?
I'm on Brave.
You got to go to Safari.
Here we go. Yeah.
Yeah, there you go.
Yeah, that's better. Okay. Now, so we got the quote Walmart still the same. And here's our option chain. Here's our chart. So let's check this out and see where it is on the chart at the moment. And line chart. You can use your micromoment advanced charting also on this. So we're not really at a high. So we probably wouldn't be doing this today, but we would do this. Say we did back here. Okay. So on the chart, we want to do it when it's making an inverted V because we want it to drop because we're going to sell out of the money calls. And we sell those out of the money calls. Back over here. Is that our charting? Where'd our charting go? Here you go. Okay, the stock's selling for 141.44. We're going to go out a long enough way, still, on the 16th of next month, and we're going to go as high as we can go on the strike price. Now
Are you on Brave or Safari?
This is Brave.
Yeah, you got to. Every time you change to Brave, we can't see it. You have to stay.
Oh, okay. Okay.
Okay.
Back there, right? Okay. Option chain now. Okay, now act as if we just bought the stock and we just paid $141.30 for it. And again, it doesn't make any difference if you paid $10 for it. You still use that $141.30. We're going to go out here another month because we're too close. It's one day away. And we're going to sell it out of the money. And the highest we can go is strike 143. And we're going to sell it at the bid price for $1.16. Now, what that means is if the stock goes to $143, we're going to be called out. Well, if we just bought it, we only paid $141 for it, whatever it is, $141. So we got a big profit there. Plus, we've got the premium of $1.16. Okay. So we've got $1.16 plus what we have 143 minus 141. What is that? 142 something. I just say 142. Oh no, we would have 141 from that. So what is it? 2 something profit. So that's just add $2 to make it simple.
It's $2. Yeah.
Okay, that gives us about $3.66 profit. Now this is a stock that normally we would get the dividend. We can go up here and check and see what the dividend is. Maybe not on this particular chart, but the yearly dividend. I don't think it's on here. Go back to one of the other charts. Let's see. Go back over here. Still down here. Quotes. Oh, come on, there we go. Okay, dividend yield right there. The dividend yield is 1.53%. Okay, so we're making 3.66 just on this transaction. And what's going to happen is that stock's probably going to come down because we're doing it at the inverted V. Okay, now if it comes down, back over to this other chart. I never have done these, just it's confusing for me. But get back over here. If it comes down, they're going to pay us $143, and we're going to keep we're at $1.16 over here, so we're ahead $3 and something, and we're being called out of stock. Probably not going to happen because number one, if it does happen, we got to get profit in the stock, and we're just going to turn around. We're at the high inverted V on the chart, so we'll just let it drop on down and buy it back for whatever lower price we want to buy it back for. Now, if you may have only had $50 in this stock, so you're making a huge profit, and you're going to do this. You need to really do this in a tax oriented account, like the standard. What do they call them?
Like the IRA, yeah.
IRA, yeah. That way you don't pay any profit, so you don't pay any taxes on these profits. And then when the thing goes back down, you just go back and buy it again. So you haven't lost your stock. You made a lot of money, and you made probably twice what your annual dividend would be. And you're going to do this every month. So if you do this every month, you're making a huge amount of money. And Randy's going to take it over down and explain our 20-cent rule and a couple other things that also assure you're not going to get called out, and how you eventually have no money in your stock at all. Go ahead, Randy.
Yeah. Good job getting through that, Joe, because I know this is a whole new thing for us to be able to show charts and that stuff here during the podcast. So
I've never done it before, so I've never used this platform for this, so I was kind of hesitant there. Go ahead.
Yeah, so we'll get better and better at that as it goes. But so this stock also has weekly options. So for somebody that wants to be a little bit more active, they could actually sell a call every week and generate income every week. If you don't want to be quite so active, then you just can do it on a monthly basis. So you only have to do it once a month. But as Joe said, that typically we're going to get in at the top of the chart, and so it's probably going to go down some, and you won't be called out. You'll just keep that dividend. You'll keep that premium from selling that call. You'll still have your stock. You'll still earn the dividend when it comes up to the ex-dividend date. And for Walmart, that's early December is when the next dividend will be 54 cents a share. So Joe just showed how to make over $1 a share every month. That's more than double of what the dividend actually is. And if you don't actually ever want to sell that stock, and it goes up and goes through that strike that you sold, we actually have a process that we teach that's called a meaningless name to you, but it's called TSS for defense. And so we can buy back that call and roll it out into the future to generate additional income and have you not get called out.
So see, instead of getting $1, 1.53%, excuse me.
Yeah.
Instead of getting 1.53% the year yield on the dividend, I mean, you get a huge amount of money, and with no risk of losing your stock. And if the stock goes up, it just the whole thing expires. You keep your stock, you keep all that money you made, and do it again. So
yeah, and if you, as Joe said, if you happen to get called out, you can buy the stock back and sell another call against it, and not lose any money on the stock at all. So we have a whole set of processes around this procedure, which we call a technique, that can allow you to generate income month after month after month on a stock that you never want to sell, and earns dividends along the way. So when you select what I think what they call the aristocrats, the good solid quality stocks that pay increased dividends year after year after year, and you have those in your portfolio, it doesn't matter whether they're going up or down over the long term. If it's a good quality company, it's probably going to go up, but you can generate income on a stock that you've probably just been watching it go up and down. And a couple of % a year on a dividend, now you can earn a whole lot more.
Yeah. Can you see this, Randy? It says 15 of the best dividend stocks.
Yeah, there it is right there.
Okay. And so you can just go down this. And so if you don't have a dividend paying stock, this gives you, there's a bunch of them in here, and the yields and everything. And you get them off of things. And there's many of them, like there's the aristocrats side, which I have on here, but I can't pull it up. I don't have it where I can. But look up there and see if anybody's giving us one to check out for them.
Yeah, we have Apple and Tesla.
Okay, I'll put it back over here. We want to get it back where we had it.
Now, of course, those are companies that are not volatile at all. They hardly even move.
Yeah. What's the
those things are wild. Tesla, Apple's AAPL, 2 A's PL.
Okay, Apple, and then again. The Apple. Okay, here's the charts on the Apple. Now the Apple at the moment, October 8th and 11/14, is trading for 115.20. No, it's 100. It's 100.
Yeah, just over 115.
Yeah. So if you go down here, you wouldn't go this month because it get, well, this is only tomorrow. So we go out here to the 16th. See, so you'll be able to do this twice in a month at least. It's usually these normal ones. And we're going to put in 116 and a quarter. What is it right now? 100 and what?
115.50.
Okay. So using our concept here, if we sell that one, and I have to look at the chart in a minute, and we're going to pick up $2.59, which is a lot more than we're going to pick up in the on a yearly basis in the because like Randy said, we're going to do this once or twice a month. And if the stock continues down, all this is just going to expire, worthless. We're going to keep the premium, and that we got this, and we're just going to start all over again with another call. If it goes up, if it defies us and goes up when it should be going down, we end up getting 116. So we make pretty good money from the 115, and then we still keep all the premium. And we're called out, but we've made money all the way. And this is in a tax-free account. It doesn't make any difference. And we just wait until it comes on down, and we buy the stock back for less than we sold it for. And that's really all there is to it. So let's take that one. Okay, so now what we would do on this one, this Apple, we'd go out here. We would sell for $2.59 the 116.250 strike, and that's it. Then we wait for it to come on down and wait for this thing to expire. It's only going to be about a month. It's going to expire because it's already the middle of the month here. And so this would be the, whatever the date here is on this one, the 16th. So it's going to be a month. Yeah, because this Saturday is the 10th. So it's going to be, a month, shorter week. And we're going to make a fortune. And it's just so simple. And we're not going to lose the stock. It's going to be impossible for us to lose stock. We're not going to pay taxes on the profits here. It's just so simple. The only thing is really, and you need to make sure you're doing it in an IRA account. And you could do it in a non-IRA account, but you're going to pay taxes on every time you get called out here and get all that money. Go ahead, Randy.
Well, and Apple's not a high dividend paying stock. They're 20 cents a share is the dividend. So if you own Apple, you didn't buy it because you're wanting to get a great dividend. They just don't pay much of a dividend. And I don't think Tesla even pays a dividend. I'm going to look it up right now.
An Apple.
No, Tesla doesn't even pay a dividend. So this technique is great for those that pay dividends. It can be used on one that doesn't pay a dividend, but you're not going to earn any extra money on dividends when the stock doesn't even pay a dividend. So Mark is asking about AT&T. Now, AT&T does have a pretty nice dividend.
Okay, let me go back over here. Again, I'm just not used to this chart. AT&T is a symbol ATT, right? What is symbol?
It's just T.
Just T.
Yeah, just a single T. Now it has a great dividend, 7% per year dividend, 52 cents a quarter.
Wow.
So that is one that you would probably look at owning for the longer term to generate the dividend and generate this extra income all along the way.
So what's the price of it right now? 100 and
right now it is trading at
28.49.
Yep.
Okay, we'd come out here on the 16th and sell that 29, which is more than we just bought the stock for. Or if you already own the stock, then you already own the stock, you have to buy it. And we're going to sell that 29 strike for, I guess, what, 10 cents?
Yes.
And if we only had, let's say we just bought it. So we paid $28 for it. So what is that? 10 cents divided by $28 approximately.
Close to 5%.
Yeah. So it's just huge. It's just an absolute huge, simple. And the change is you go to CBOE and you pick up, that's all I did. And you pick up this whole page. You got various things up here you can do. And that'll give you the chain. And, Randy, can you think of a simpler technique?
No, that's a real easy one. And of course, I mean, the individual person would have to do it on their own broker website because whoever their account is that has the stock in it, they would go to the option chain there to
exactly
the technique.
Now, if we refine this some more, Randy and I were toying with the idea. This is not like a long seminar or anything like that. But there are some neat things with the 20-cent rule and all that stuff. And that's a teachable thing, maybe a 3 or 4 hour seminar. And we've only talked over this a couple of days. And so, but we might come up with something. In the meantime, we'll be available to help you out. Just be like, give us a stock, and you're in business. So
we could put together a little workshop, Joe, and we'll teach them how to read the chart, how to select the best option to sell, what time frames, and then how to what we call manage. The goal is to not be called out, just keep the premium, which you're really renting out. And like Joe, you usually talk about, buying a house and renting out your house. This is really buying a stock and renting out the stock. So you're getting paid week after week or month after month to own that stock. People are paying you, they're renting it from you. And so you're generating that income and get the dividend along the way without having to sell that stock.
What's the symbol for Tesla? TSL?
TSLA.
Let's see what they show.
That's a much more volatile stock, so it has a lot higher premiums.
Oh, this be interesting because it's $433. Okay, so it's just, and again, we're just doing around figures here. We're not doing these things. We're not worried about it exactly to the penny. We go out here to the 16th, so we're about a month away. And what did I say it was? 433. So we sell 35. So if it continued up, we'll look at the chart in a minute. That's what will tell us if it's time to do this. But if it continues up and we get called out at 435 and we just bought it, then we're making a good profit there. We're getting, my goodness, $14.80 premium over here. Huge if we get called out. If we don't get called out because it went down like it's supposed to go down because we're buying it at the inverted V on the chart, we're going to keep the 1480 and keep the stock too. And we're in this into this stock for the dividends, so we know it's going to go up and down. All we're getting the dividend, nothing else. And so and that, to me, I just think that's the most incredible thing.
Yeah, and Joe, there are much higher strikes on the option chains as well. They'll have less premium as you go higher. Yeah, but you can even sell much further away out of the money calls. To increase the probability that you're not going to get called out.
Look, Ray, that's only about another month, and the 437.5 is $23.85.
Yeah,
versus $14.80.
Or a huge amount of premium for this close. But they could also sell a $500 call and get a couple of dollars out of it. So there's it's just a whole process that you learn on how to select that strike that you want to sell to increase the probability that you're not going to be called out, and you just keep getting that rent.
Okay, I'm going to go back over here to SteamYard and we talk about this thing a little bit. Okay, Tim, what do you think?
Oh, I think it's amazing. Very simple, very predictable profits, especially when you add in the our charting to it. It's amazing.
Yeah.
And we do this already with my wife's IRA. We do covered calls out of that account, and and do well, and do really well.
Y'all have some dividend paying stocks in there?
Yep. Okay. And when I first learned this, almost a year ago, and started doing some covered calls in her IRA account, and just was amazed. It really is a can't miss technique, especially when you add in the management techniques that y'all developed. Your percentage of winners. Well, I think Randy said it best. He said, well, how do you lose on this? Well, the company goes out of business.
But that's like it always is. Yeah. Frank says, how is the 10/16/20 option expiration a month away? It's not. That makes it even better.
It's actually just next Friday. So that's just barely over a week that they could generate that much income.
Yeah, the whole point is, like I say, this is the first time Randy and I just discussed this a couple of days ago and said, this is really something we never have taught it. And but like Tim does it, and most people would never think of it because they think, oh my goodness, if I sell a strike down there and it goes up and I get called out, I'm going to lose my stock. No, you're not, because you're collecting so much money and you're doing it at the top of the chart. It's chart heading down anyhow.
Mm-hmm.
And you're just going to buy it back, and you're not paying any taxes on all this money because you got it in an IRA account. And so what good, the stock's just sitting somewhere like a safe deposit box. It's just sitting there. You don't see it anyhow. So you just won't see it. But you've got everything to back right back in. And you don't have to worry about taxes. In the meantime, you reduce your costs every time you do that. And I think it's something like 2 years, Randy, you have no cost whatsoever in the stock. You still got the stock. You're still doing all this stuff, but you have no cost to the stock whatsoever.
Yeah.
So,
yeah. I mean, and even if you get called out, as we have, several times, so what? Buy the stock back.
Yeah. And Jack says here, can you touch on how you would roll out the option so you don't get called out? Well, now remember, you're going
to. But Joe, we'll do that in a workshop because it's not something that you spend 1 minute on to discuss. Yeah. It's a whole process with analyzing the chart, analyzing the option chain, and then deciding what is the best option to go to. And,
the alternative on that, Randy, is to just go ahead and let it get caught. You're making money all the way, and then you just go back in. What he's saying is he just didn't want to get rid of it in the first place. And Randy has techniques to take care of that, but we can't go into them here because this not the time or place, and we're not. I'll have a tough time just getting these damn pages up here. So, no, that's a good question. Anybody else have some questions? Jag, Frank, Mark, we did look at T. We did Apple, we did Tesla.
Well, Joe, just as a quick case in point, like on Tesla, you could sell the option that expires next week, the 500 call. Tesla's trading at 430, so it would have to go up $70 a share to get called out. So you're probably not going to get called out. And along the way, if it was going up that much, you could manage and roll this one out. But that's still $1.50 a share, and it would go up $70 before you get called out. So I think that would be above the all-time high. So that's the kind of premium that's available on Tesla, even though Tesla doesn't pay a dividend, but it has so much premium because of all the speculation in it that you can be $70 out of the money and earn $1.50 every week.
Yeah,
on the Tesla stock, and still participate in whatever it increases and decreases. If your goal was just to hold it for the rest of your life, then you're generating income while you're renting it out, generating that income while you're just holding it.
Yeah, I guess the difference is we've been saying dividend pay stocks. Randy's right; doesn't have to pay a dividend, but you sort of we've taught that for a long time on just where you just buy stock and do the TSS thing, and all that. Yeah, but you can still do it.
Yeah, and every week you didn't get called out. You reselect how far out of the money you want to sell the next one.
Yeah.
So you can just keep writing it up. It could be $700 or $800 a share later on, and you're still generating income on it each week at the higher and higher level.
But I know we have clients that have a lot of dividend-paying stocks. They inherited it from their grandmother. They inherited it from grandfather, and they never wanted to get rid of them. And they really never thought about it because they keep getting those dividend checks every quarter, And this would be a new revelation. And you got to think this one hadn't been around forever because how long have we had those IRA accounts? Not all that long, So you always in a tax position. Now this is no tax deal.
Yeah,
absolutely.
Especially if it's a Roth IRA, you'll never pay income tax on any earnings in there. I mean, that's right. Unfortunately, I'm too old. I never was able to get a Roth IRA. My son has, and my daughter, they have Roth IRAs. So their earnings, they're never going to pay income tax on it. Well, and unless Congress changes something. But right now in the Roth, whatever you earn is tax free. So that's an outstanding way to be able to grow that retirement account.
Yeah. Folks out there, Randy, we've mentioned this before, so we're not, doing any secrets here. We're not going to say the name of the stock, but Randy has a stock company he retired from, and he's been. How long you been retired now from that company?
13, almost 14 years, amazingly.
Yeah. And he never because he was using our technique.
A long time ago.
Yeah, because he was using our technique that many years ago, and because he was able to retire and not have to worry about selling his stock or anything because he was just earning all this income. So I think you've essentially been doing this because that's a good stock, and I'm sure they probably pay a dividend. And like when I mentioned this to you the other day, you knew exactly what the dividend was. And look, it was like 2 days later you were going to get your check, and you were going out there and selling, doing exactly this, just making incredible amounts of money. Yeah. And by the way, Marion says Randy's an amazing teacher. That's how Randy is.
Thanks, Marion. I teach a covered call a service, how to do lots of stuff with covered calls. And one of the positions that we have is Verizon. Verizon just paid its or had the ex-dividend day yesterday, and so we use this technique. We're generating the 67 cents a share, I think it is, on Verizon. We're not selling the stock, and we're earning that dividend, and we're generating weekly income on the Verizon position. So we've been using this technique for years and years and years in the covered call service that we teach. But this one technique is really easy to learn and easy to teach, and we can put a little short workshop together to teach people how to do that.
Yeah.
And then they can send emails in and ask questions about it later on as well.
And I've got one article that is a regular weekly article, and they've got these stocks. None of them pay less than 8.7%, and they're all, I mean, blue chip, 8.7% dividend. That's fantastic. That's huge. And you're doing the same thing. You're doubling, tripling that. Probably on a weekly basis. Incredible. Wow. There's a lot of opportunities out there. Yeah.
Must be tobacco stocks.
Probably so. And I would switch over to it, but I'm afraid I'd screw up this whole thing.
Yeah.
Yeah.
But you don't have to own a $400 Tesla stock or a $115 Apple stock. AT&T, Verizon, there's lots of companies, Pfizer, there's lots of companies out there that are good, solid quality companies that don't cost $100 a share, that pay a good dividend. And you could have the weekly options that you can generate income on a weekly basis. Hey, Tim, I just got a micro moment trading profit. So,
what'd you make?
Tim's probably watching the charts as the market's just dropping, and we're generating income with his. His is a different technique. It's not a covered call one, but we have multiple different processes here at Micro Moment Trading to generate income. But I just got 9.4% return.
Nice.
On a Micro Moment?
Yeah, on a Micro Moment. Yeah, it just clicked off when I was talking. So,
which one? I'm in a Q put right now.
Yeah. As you know, I do SPX, the index, and so it just generated $1.10 a share, which was 9.4% return. And
the reason I like this, where we have the video where you can see people. See, we've never seen Deshaun silent. We didn't know what it looked like, but now that we can see him and he's still not saying anything, so we know now what he looks like when he's silent.
Yeah. Well, I only do the micro moment trading, so I just been over here trading. I actually just finished a put trade too. I've actually made this is my 5th trade that I've made since we've been on this website.
Really? Yeah. Well, now, hey, you're going to send them to me, right?
Yeah, absolutely.
Okay, Tim, you do it too, yeah.
Yep.
Joe, that's why he's been so quiet, because he's been concentrating on that chart and generating income. Well, we've been talking and talking about how other people can generate income.
There you go. Well,
yeah, for instance, I just made 24 cents. So let me see the percentage.
24 cents. What was that on spot?
Yeah, it's put just. I mean, I'm pretty sure what everyone is doing, but it's humongous. 7.4%.
Fantastic.
Yeah.
Now, you guys get these to me now. I've already sent out the for today, but we'll add them in there for tomorrow.
Yeah, I see the headlines. Pelosi said there's no standalone stimulus bill without a broader bill, so that's why the market just decided to just sell.
Yeah. Okay. Does anybody else have a stock they wants to look at? Just type it in there. Okay, well, Ray, I'm excited about this. I think we can work up a Sweet little deal. Won't be expensive.
Oh,
and
absolutely. Yeah,
because-
and we'll go through the aristocrat stocks that are good, solid companies that pay a great dividend, and teach how to generate the income by renting them out week after week, and the defensive management techniques in case it goes up higher than you expected, and you don't want to sell it. You can, as Jim said, you can just let it get called out and then just rebuy it and do it again.
yeah.
Or we have a process that you can keep from being called out and still keep generating income and earning the dividend all along the way. You're not, you still own the stock, so you're still going to own the dividend.
Yeah,
so
the platform we could use would be our GoToWebinar, which we all got great control under. It's easy to pull up your pages, and we can go to our charting and our toolbox, and I mean, that would just be the perfect vehicle to do it. So
yeah, and we'd also show them how to use the proprietary advanced chart that even gives a better outlook as to where that stock is heading.
Yeah, when you tie this in with that advanced charting, it's just there. Yeah, there's another stock. We'll get that in just a sec, Mark. When you tie that in with the advanced charting, it's got to be almost 100% of the time. You're not going to get called out. Okay, but GS, would you put that question back up there?
GSK. I think that's probably GlaxoSmithKline.
Okay.
They have. I think they're working on a therapeutic for the virus, and so they're doing pretty good.
Okay, it's GSK, right?
Yeah,
Hold
GSK.
on. GSK.
Okay, Joe, make sure you're on Safari.
I am not. Let me go to Safari.
There you go.
Okay, GSK. Oops, not TGSK.
No.
Yes. Okay. Okay. There's the 1136 price was what, 37?
37. It's trading about $37.
And you've got you would go out here, go out to the 16th, and sell the 39. And it's what is it? 30 what?
It's at 37.
SAS. It'd have to go way up. You make a huge profit. And it's there's no price for that right now. That wouldn't be good.
Yeah. So you could go out a little bit. You could go out to the next week if you want.
Yeah, well, that'd only be a dime though. Yeah, that one doesn't. It gets to a quarter, but we're out to the 30th.
Yeah,
so that's still less, substantially less than a month.
Well, it's still income, Joe. That they haven't been earning a penny on it. They just been watching it go up and down. This is a process that says you can just keep watching it go up and down, earn your dividend, but also earn extra money along the way. However much it is more than you've been doing, because you're still participating in whatever the stock increase is, if that's what you're trying to do.
Yeah, Tim, I just got that Microsoft right.
So,
there's another one, 3M.
Okay, hold on, let me get back over there.
And after that, I have a question about the process because I have zero knowledge of.
Okay, just a second. Let me get 3M in here. Okay, so we've got a 16. Oh, look, this is great. There's $170 strike, and the price right now is 166. Boy, it's got a long way to go, right? Long way to go. So it's not going to get there. And then we'll look at the chart here in a sec, and we got $1.13 for it. And so what would happen if it goes up 170? We're going to get called out, but we're not. It's fine because we're getting a huge profit. Even if we bought it today, we're getting a huge return here, and it has a dividend. You're going to get your dividend anyhow. I don't know what that is. I have to find it here, but
I'll look it up.
Okay, and let's see if I can pull up a chart here.
The dividend's $1.47 a quarter.
Huge. Okay, huge. Good.
So that's $1.47 a quarter. You can almost get that just for a couple of weeks right there, Joe.
Yep, absolutely. Yep. So go over and get a chart here down here. Pull up. Oh, well. It's obvious I'm not going to be putting up a chart on 3M rent. Okay, look, Randy. It's not can't do much with this chart here, but it's up. It's very top. Look at that. You know.
Yeah, it's 170 is about the high that it's had for the last 3 or 4 months. So
yeah, exactly.
I'm going back to February right there. So that 170 call would be at the very, very top of the chart right now.
This is the dividend rate right here, right?
Yeah, it's 3.5%. Yeah,
here 3.5. Yeah, no, that's a perfect one. Who gave us that message? You know,
Mark did that.
okay, that was perfect to do this with. Absolutely, said good place on the chart. You know, and look how many places you could have done this. You could have done this here. Huge gains. You just kept going. You just kept on those inverted V's. You would have kind of stopped here. You wouldn't have to, but you'd want to because otherwise you're going to be being called out, and it's okay because you got to wait. Then if you're going to be called out here, let's say you go back down here for substantially less you were called out for. You just keep going like that. Okay. Okay. Good deal. That's super. Anybody else have something? Marcus, you might clean that one. Craig?
Yeah, Craig has Merck, MRK.
You say MRK?
Yeah, MRK.
Okay.
That's another good solid stock.
Yeah. Hold on a sec. Okay, the stock's going for $80.90. Let's say $81, and we can go out to the 16th and get. That's kind of close. It's 81.50 to be the highest on that, and we still get 71 cents for it. Yeah, and if it's at the top of the chart, it'd probably be a good deal. You know. What's this thing?
Yeah, and again on the person's individual option chain out on their broker, there are higher strikes than that. There'd be an 82, an 82.50, an 83. So they could select a higher price for the stock and increase the probability that they're not going to get called out. They don't have to just use the 4 that are shown here on the CBOE.
Yeah. Okay. Seems anybody else has something? Don't see anything new over here. Okay. Okay, guys. Well, we're within 1 minute of our max time.
Well, Joe, Eggman says that he would really like to see a seminar on this, so we can put one together.
Yeah. And it'd be a lot smoother than what I'm doing right here. Something I've never done on this. If we were using our other platform, it's easy. You know, I've never used this one. So.
Yeah, we teach webinars every week, so we know how to use the webinar platform.
So Deshaun, send me any of those trades, and Tim, if you do any more, and well, appreciate everybody being here. And
well, Joe, give them the email address that they can send questions to.
Okay, they send questions to I guess just our support micromomenttrading.com. Support microtrading.com.
Yeah.
Send the questions there, or you can send them to Randy at micromoment.com. You can send them to me.
No. I get enough emails, but if you come to the workshop, then you'll be able to send me emails.
Okay, well, we thought this was so important, even though we're really kind of fluffy on the presentation here because my ability to use this platform is not real good. But the whole point is this is such a huge deal. And we've sort of done it for years and years and years. I haven't read it for 13 years. And it just really works great. And Tim's sort of doing it, same thing,
Mhm.
And we felt this is something we could really get into. And, who knows? It'd be great.
Yeah.
Thanks for everybody being here. We'll be back here again next Thursday. We'll be putting a link on our to this seminar next Thursday on YouTube. We'll put that. We put it almost every day when we're doing our microphone sessions in the morning. And if you have any questions, write them in, and we'll take care of it. Thanks a whole lot. Thanks for y'all being here. And Deshaun, it was great to see what you look like when you're not talking.
Hey, Joe, don't forget, I'm teaching the workshop on advanced charting this week.
Yeah. Tell about that because they can still sign up for that.
Yeah, so Tim mentioned, and we've touched on that there's a proprietary charting system that we call advanced charting, and we would be able to teach you how to do that using the dividends as well. But it gives you insight as to the direction that a stock is going, the momentum that it has, whether it's at the top or the bottom of it. Is it just the beginning of a cycle or is it near the end? And we teach how to do that. And I'm teaching a full day workshop this Saturday about how to read, interpret, and then use that chart for the various types of trading that you might be interested in. So that's coming up this Saturday.
Mm-hmm.
And what's the time on that? When?
It starts at 9 Central Time.
Okay.
And it will go through 4:30 Central Time.
Okay. And you can sign up for that if you go to our Facebook site. There's a place on there you can sign up for it. You can. Sue Ann has sent out several sign-up letters, emails. You might find one of those in your emails, or shoot Sue Ann at micromomenttrading.com, and she can send you that sign-up link because it's not until Saturday. So that's good.
Yeah. And Eric says that he's going to see me on Saturday. So looking forward to Eric. And you'll be able to ask questions during the workshop and the whole bit. So
yeah, and we have a lot of signups for it, so there should be a lot of good questions, and it's gonna be a good little seminar. Or what do you call it? It's not a seminar. It's a
workshop.
Workshop. Yeah, workshop. Okay. Well, thanks everybody.
Looking forward to it.
Again, Deshaun, Tim, if you guys get anything else, let me know.
Okay.
Hope everyone has a great weekend. See you on
Bye,
Saturday.
And you lost. You came in second or third this last game. You have another one in 2 weeks. Are you gonna win this time?
Yeah. I think we're gonna be able to get out there and have a better showing.
You know what's gonna happen? If you don't, they're gonna trade you. They're gonna trade in an old man for a younger man.
No, this team just picked up my option, so they're looking forward to it. They're paying me the big bucks to come out there.
All right.
What did you say, Deshaun?
Nah, so championship.
Yeah. I'll have to show you the trophy when we get done. Yeah.
Nice.
Okay, I will cut everybody off. We'll see you guys later.